Buyers are passive. Even I screwed it up. Did you ask me to repeat it? That's why, Debbie. All right, offers are decreasing, bids are increasing. That's your formula for buying because bids are getting aggressive. All right, and offers or sellers are getting passive. That's your formula for buying. It all goes down to that one simple formula. Okay, that's column 1. Does it matter that it's 26 lots and it went to 38? What about this 19 that went to 27? Does it matter, really? Here's the answer. Yes, it really does. How long will it take you to calculate the difference between each one of these? Long enough that you missed a trade. So, yes, it does matter. Yes, you get stuck on these levels and calculate all day long and try to pick more meaningful information out of it. All we want to know is it increasing or not? Okay, next column to the right here. We're going to ignore MBO because not everyone has it. And BO just sounds bad. So these are your bids. This is where you're going to see buyers adding bids. Now, if this 39 turns into a 59, if you're looking here with your eyes where the crosshair is, you might miss that, right? But you will see the change. You will see these numbers change. You'll see it in real time. I'm going to pause it and ask you guys what to do. All right, so these bids actually become less important because you're seeing the change of this column in this column. And that's really the important information. Remember those ladies I showed you? Boy, they wish they had that. That would have been super helpful. The next column down here to the right is the last traded quantity. So what you're looking for here is if the last trade is here at the 75, and actually it's not. The last trade is actually at this current moment on the offer, one lot. You can see it because it's highlighted. If the price goes down one tick, okay, so these are 3 ticks. The price goes down one tick, and the last sale quantity is 75. Is that aggressive selling? That's pretty big size, right? Okay, what if it goes down a second tick? Now it's only 20 contracts. And it goes down a third tick, it's only 2 contracts. What do you see? We're going to go through 4 examples, don't you worry, this is going to stick. You're seeing exhaustion, you're seeing selling slow down. Why is it slowing down? People are running out of stuff to sell. If you have a garage sale and you sell everything in your house, when will that garage sale end? When you get tired? Or if somebody buys everything in your house if you're moving? Then what do? You got to shut down the garage sale because you got nothing to sell. So that's one pattern. That is seller exhaustion. If sellers are being exhausted, that means they're getting passive. Right? Capitulation, there you go. What about the other way around? 5 contracts, 30 contracts, 250 contracts. That's aggression. That's selling aggression, and that gives you the cue that you're looking for the downside. Because everything you look at is making a guess. The footprint's a guess. The volume profile is a guess. It's all a projection. What you see inside of this ladder is what's happening. This is the momentum, the tape of the market. So as selling increases on the way down, this is aggressive, short, or look to short. The same token, trick question, what if this happens? 75, so you know it's going down a tick. Another tick, 125. Another tick, 450. Another tick, 2. It ticks up, another 250. It ticks down, another 2. What are you starting to see? Is there a big selling? Yeah, tick 3. But what about tick 4? Not really. So whoever wants to sell is limited to this price level, which means there's more than enough buyers interested to pick up the sell side. Anyone who's willing to sell quantity, there's enough buyers to absorb it. So while this is aggressive selling, the fact it can't move anymore actually becomes exhaustive selling. So this is a tricky one. It doesn't necessarily mean you should buy. If you're in a position to, okay, selling's starting to slow down, I'm going to get out from a short. Okay, let's look at the next column. The buy side, it's literally the same thing. This is the last trade on the offer side. These are your market buyers. So because this is the same study, we're going to treat it like one. Okay? Remember, what is the formula for buying? Passive something, active something. Active buying, passive selling. Selling, passive buying, active sell. It's a formula. I've cracked the code of the market. But don't tell anyone. They're going to be on to us, the algos. They don't know this formula. Top secret proprietary knowledge. So when these last sale trades are increasing on the bid, this is active selling. When these last sale trades on the offer are increasing, that's active buying. The reverse is passive. I think it's time to do some examples. You guys want to see this in motion? We're going to do 4 examples. So the way you do replays, you hit chart, replay chart, or Control R on your keyboard. So chart, go down, replay chart, go right, replay chart. Okay, this little module comes up. Don't just click play. We have to pay attention before we hit play. All charts in Chartbug. I mean, there's one of them. So yeah, let's keep it at that. For the DOM, calculate at every tick / trade high CPU usage. I mean, we pay so much for these CPUs, we barely use them. So let's put them to the test. We select that option. Using start date and time. Let's go to, December 17th at 9:29. Right before the open. There is no next bar, so this is a matter of speed. Keep it on 1 when you're trading the DOM. Oh yeah, it was FOMC day. But no, that was Friday. 17th was a Friday. FOMC was the 15th. So, what do? We hit play. Do not clear trade data for symbol. You need that data. Just click OK. And enter processing in steps. Jeez, we'll go 1 second. And we click OK. The DOM reloads. Click pause. Okay, let's look at the chart right now. This is back in time, the then recorded information. Okay, what are you seeing? Let's just do a quick little review of reading the DOM. Well, we see some buying at 20. Okay, there's a pretty good support, 296 lots. That's nice. Let's mark that. There's some more buying 18 to 18.25, and then some at the 17th. So at some point, we can test these 3 levels because there's a lot of bids and liquidity down here. You guys find yourself wondering what kind of market are we in? What does the chart look like? Are we getting higher highs, higher lows? Is your mind going there? What's the volume profile look like? Admit it, you have questions. Well, today we have no answer to that information. I don't know, because that chart doesn't exist yet. This is the 90s. So, let's hit the play button. Watch closely. Where are we watching? Section 1, Section 2, or Section 3? Where are our eyes going to be fixed, like fixated on that section? 2. Bingo. Remember what we said? 10 ticks up, 10 ticks down. Okay, let's hit play. Watch closely. What do you see is happening here right now? Pulling, stacking. Some more sellers went on the offer. Bids increased a little bit. Watch that column for a second here. Oh, it flipped to selling. See that? And then these buyers pulled their limit orders. Buyers moving limit orders, sellers coming down. Is this the time to buy? No. Is it time to sell? Not yet either. Let's watch a little bit more. What is the last trade? 16? Look at the one below it at 21 quarter, 1. Okay, let's hit play a little bit more. Watch the pulling stacking column right now. What's happening? Boom. See that there? What happened? Very important. There's a lot of information you just got there from a 2-second pause. Piece of information number 1. Buyers started to add on the bid right at the market price. Look at this 78. Where did this come from? Out of nowhere. It just got built up to be a pretty big order. 78 is very close to the market. You see here they added 24 lots. Or did they add it right on the market? That's the best bid. Doesn't get any more bullish than just going market orders. This is pretty aggressive. Right? Remember we said that the orders closer to the auction are the most aggressive. At the same time, look at the last trade. So we know there's intention to buy because there's a lot of stacking of bids. Look at the last trade. What example was this? 1 tick, 30. Second tick, 46. Third tick, 28. Fourth tick, 58. Why is it looking a little bit less bearish right now? 2 reasons. One is obviously pulling stacking. Bids are going up. So we want to see in a bullish market. Look at that 21 quarter. That right there is your answer. Struck it out. I wish I could zoom in with Zoom. Maybe I could, but I don't want to figure it out right now. What piece of important information just came out here? Okay, I'll give it to you because this is the first example of 4. 58 contracts traded on the bid. How come we're trading at 21.5? How would you feel if you sold the 21 quarter 58 times and we move a tick up right away? How do you feel? Not good. I'm stuck. Exactly, Sergio. I feel stuck. Okay, let's hit play. Let's see if this continues. Okay, we're trading back down into where that trader is stuck. If it breaks and keeps going lower, that trader's not stuck. Now he's into making money. Okay, let's hit play. 99 traded, so they got unstuck. 1 traded, 38. Again, a big number below, small number above. So selling right now is slowing down. But there's no real sexy bids here, is there? It's kind of just boom. Meh. Oh, boom. What happened right there? Look at the relationship. 99, high number, a lot of selling. 4, 26, 13. It looks like selling's thinning out, right? Market selling is thinning out at the same time that bids are starting to increase. Does this look like a pretty interesting level? For a long? Sellers are getting exhausted. Bids are increasing. Okay, let's get a little more information. Look how thin selling is. Selling's getting absorbed. Boom, Seth, 1 contract, 13 below the 99. So you sold 99 lots, pushed the price lower, and now you're trading ones. Think about that. No offense, you could be 100% of what's sold at the last trade right now with a 1 lot with a $400 account at the end.